Boom. May pips and percentages be upon you. What's going on, my friends and fellow traders? Today, I want to conduct a back test session of pound yen, GBPJPY on the 5-minute time frame. I'm going to go over a brief explanation of the strategy. I've done this before, but I'm trying to show you how it works in at least a replay environment as opposed to a live environment. But hopefully you'll be able to take notes and catch this simple strategy, this simple approach using 3 confluences: the 50 EMA, the Fibonacci levels, and structure. We're just using price action, folks. All right. First thing I want to do is I want to give a disclaimer. You're going to see all the flaws and everything in live with this back testing. So this back test session. So what I mean, I'm giving it to you the way it's coming, and that's the way it's going to be. So if I hit all of them, don't think oh, I got to be a fake or something. If I miss all of them, doesn't mean that the strategy doesn't work. It's just that I had a bad back test session. I'm going to go over the misses. I'm only going to do a week. I'm going to go to October and the second week of October, because I did the first week, which was for a couple of members of the community, and somebody put it in my ear that maybe you ought to do a video that explains the strategy and do a live back test session where newer members could find a good simple strategy to come at the markets, and something that they can that's easily consumable and easy to execute. So that's what I'm doing. But first, let's go over the technique. Now, this could take a while. This could take a while. So I did it. I spotted some areas where you could see the technique in action. Some action in action. All right. And I found a good example here. What I want to do is cut it here so that you can see how it works. Let's stop it here with the replay tool on TradingView. It's very, very handy. All right. Now, what do you want to do? What you want to see? Matter of fact, let me stop it here. All right. What you want, what you want to see is a breakout, a clean breakout of a level. Okay. You see how this EMA is kind of level? That's the time you want to avoid it, because price is in consolidation, and it hasn't picked a bias. There's no trend up, no trend down. So you want to avoid it when it's doing that mess. Hold on a second. I need to make an adjustment on my position over here. All right. Got some sunlight going in my eye. All right. So what I notice here is the EMA, the 50 EMA is turning up, and that's a good sign. All right. And we have the price come down and then break this level. You like to see a couple of candles in uniform color shooting up past the level it just came from. So if we want to consider this the level, that this is the level you want to see it come past. All right. A nice clean breakout. Clean meaning mostly the same or all of the same color candle going up. All right. And you want to see it till it starts to pull back. This is the start of a pullback for me. It's really a precursor. You want the next candle to be red. So the black being bullish candles on my chart. So you want to get prepared. or how you get prepared. You break out your Fibonacci's. You break out the Fibonacci's, right? All right. And what you want to see with the Fibonacci is you want to take the start of the move, the start of the impulse up, and you want to be able to measure the possible landing point of the pullback or the correction, impulse, correction, and then the impulse, which will take you back to the point where the pullback started. That's your TP or your TP1. I like to target these Fibonacci extension levels if it aligns with, if the structure to the left aligns with it or allows. If there's not like a hard resistance here, that's when I'll say, okay, I should be able to reach this TP here without a problem. But this one here is where you want to have a TP1. All right. TP1, TP2. Okay. So I'm looking at this here as the breakout, and I'm already on alert. I got my Fibonacci's drawn. Where am I looking for the landing point, the pullback? Here, the 618. The 618 is the most frequented of the Fibonacci levels. All right. You want to make sure that this 618 is aligned with some kind of structure over a previous high or low. All right. And what I do is I like to draw a line. Do I see that there's a level where it'll likely turn price back around so it can pop up? I would say there is a level here. You see it being used as a resistance here, resistance here, resistance here. Yeah, this is enough. This is a strong possibility. There's a strong possibility it hits the structural highs here. All right, that's a previous high, and there's a possibility that price just bounces here. All right, but look at the EMA. The EMA is in support of a 618 pullback. All right, because it's below it. If the EMA was here, I wouldn't be. Chances are I wouldn't aim for the pullback to come here. I probably align it here. So I'm looking for the pullback to do one of these numbers. Boom, boom. Got it? And what do we get? What we do is we set it back here. We say, there's some evidence that price will come back here. You know, I always look over to the left, and I'm real skittish because this area here is pretty strong. I'm wondering if it'll come back to here, but then I look at the EMA. So price loves to try and retouch. Once it gets away from the EMA, once it stretches the market, it usually likes to come back and try and come near to touch, and to either touch or come near that EMA. So I'm inclined to pick that 618 retracement. I hope I explained that well. Also, as the EMA, like I said, you want to avoid it when it's level, because then it's doing it's not, it doesn't have a bias. It hasn't picked a trend up or down. But when it's breaking up and it starts to curl up, and you start to see that the momentum is to the upside, you know, you feel a little bit more confident about taking a trade like this. All right, I like it when there's a clear angle on that EMA. So I will set my pending here, stretch that up here, and I want to take each trade. I want it to be a 1 to 2 risk reward. All right. The stop loss is below the 786, which is the last line for a retracement. If it goes past this line, if it closes past this 786, there's a higher probability that price will continue down. All right, and I'm no longer interested. All right. Also, the stop loss is below our trend line, which would act as like a magic wall. You don't see it, but there's a wall here that'll act as defense. So we have the EMA acting as dynamic support. We have the 618 fib in alignment with a previous high of structure. So we have some good protection for our stop loss. That's the three confluences: the EMA, the 618, and um, what we have we have the EMA, yeah, the EMA, the 618, and the end structure. That's our three confluences. I just had a senior moment there. Please excuse me. Okay, here we go. Oh, let me make sure we got there. Now I told you I'd like to target the Fibonacci extensions, right? I'm going to look go over here to the left, and I like to target these highs. These highs. This is our resistance, and we're just a tad bit below those. I think we're safe to go ahead and target the Fibonacci extensions. All right, and let's see how it goes. Now, when you get, it's dangerous. When you get a one candle drop, usually I like to see 1, 2, 3 candles. All right, but when you get a one candle drop, it's like lightning, man. It happens quick, and that put us in. Look at precisely. It got us in at the. Man, this thing drives me crazy. The only thing that stops it is if you use a pointer of sorts. All right, it stopped. It stopped precisely at the 618. Precisely. You just have to make sure we have some prior highs to align with that 618. You have to have some structure here. And you know there's a level here because price has stopped here. You got all these wick rejections from this one area. Those are your clues. And it stopped us precisely there. And that makes for a happy trader. All right, so we see the rejection here. We need the follow through. We need the next bullish candle to build our confidence in this trade to give the high probability that it'll reach TP. And this is beyond what we needed, but that's the danger, and that's the excitement, and that's the volatility level of taking these trades. The reason why we're getting it so whippy, because look what time it is. It's 3 o'clock Eastern Standard Time. That is the beginning, the opening of London. So you have to be careful taking trades at this time. You have to be, because you might, if you're in a trade, there's 50-50 chance it goes against you or against you. It goes for you or against you. So you have to be careful taking it. But for the examples of this, for the purposes of this this video and this session, it's just good instruction on how this strategy works. And will we reach TP1? We're 95% to TP1. We're trying to reach TP2, and we're there with the next candle, boom, back. That's the way this works. I hope everybody understands. We have the three confluences. The 50 EMA has to be in the stop loss zone. The closer it is to your entry, in support of that entry, the better. If it's aligned with the if it's aligned with the 618 or the 38, if it's aligned with any of these Fibonacci's, particularly the 618 and the 318, 382, that is your second confluence, along with that 50 EMA, along with the third confluence, which is structure. As long as we have the Fibonacci's aligned with that structure and the 50 EMA, we have three confluences, folks. If it's if it's going according with the trend or momentum, that adds a fourth confluence of sorts. Okay. Let me give you another example. And we have one hooked up right on over here. All right. Let's see if I can get this right. Is that a good example? It's not a bad example. Not the greatest. I'll show it to you anyway. What was that? What was that? Okay. I'll show it to you anyway. I'll stop it. All right. You see how price failed to make another high here? Actually, yeah. It failed to go higher. All right. We're gonna break this low and then break this low. Boom. Right. And then we get these wick rejections from here, right as we pass the EMA. The EMA is angled up nice. So I bring out my Fibonacci's, right? Boom. I went from the low, from the start of the move to the high of the move, where price starts to pull back. This is your setup. All right. The first thing I want to see is, do I have alignment with 618 and structure? Well, I have a level here. You can see that the level goes all the way over. All right. And prices tested it as support a few times. And now we see it tested here as resistance. So I'm pretty confident that 618 will be a good level for me. All right. Now I set my pending. I look to the left. Can I make my 272? I look to the left, and the answer's right in front of me. Yeah, but I like to make sure, and I want to make sure I say this. Err on the side of, when you see the candle that you're aligning that next TP to, you want to go to the closing and the openings of that candle, not the wicks. All right, because these wicks will fool you. Price will come back and it'll stop right here. All right, so target those lows. I mean those opens and closes. Okay. All right. Now, this is where we're at. Okay. Be careful. Be careful here. I'd much rather see the test on this level as a testing resistance as opposed to support. All right. But we do have a test of support, but mostly a resistance. So I'm going to be wary of this level as price comes in for a landing. And you see, there's no wick there. I'm feeling good because it's on its way, right? That's something to feel good about. You're saying, okay, I'm about to get put in this trade, but then it does an about face and it leaves you. This happens, folks. Now, some people will say, well, you know, you should have targeted these opens and closes here because that's where it made its turn. There's no way to predict that. There's no way to predict that. This will happen, folks. This happens frequently. Sometimes you'll miss your entry right at 1 or 2 pips. It happens, you know. And the only thing you could do with that is say, wow, you know, watch it come in, and then if it starts to turn, then you make a manual entry. That is the way to get past this, especially on higher time frames, higher than five minutes. You're going to have plenty of time to say, hey, it's turning here, so let me get in at the 50, or let me get in at the 382 if I see a proper entry. All right. I forgot to make sure that this was at 2. Sorry. Yeah, it was at 2, wasn't it? You want to make sure it's at least 2 or 1 to 2 risk reward, and then you extend there. All right, but prices left us. It's going away without us, and that's sad. And it hits our TP, and without us. But this is the setup, and you're going to take these every time because you don't know that it's going to turn before it hits your entry. You're going to take those every time. All right, let's get another example. All right, because this is worth. What are we doing here? What are we doing here? All right, I got one more example over here. We got a sell order. All right. All right, this is the point. All right, this is the point where we get the turnaround. Now, I want to explain something here. All right, when price hits this mark here, let me do it this way. All right, when price hits this mark here, this is where you want to establish your first Fibonacci. When you see that the first turn, as soon as it starts turning, that's when you break out the Fibonacci and you take it right to that level and start planning for your where it's going to make its where your entries are going to be and how far price will pull back. All right, but price didn't stop there. This was the next candle. You expected this candle to be bullish, but it was bearish. So you just make your adjustment. Remember, when you see these candlesticks, when you see these wick rejections, that is your precursor. That's where you start to say, hey, this is a pullback for me. And you're looking for it to continue on the next candle. So take out your fibs and say, all right, where's my 618? Where's my 382? That's where you want to start looking for your mark. Now, I got this one drawn here because you can see this is going to be a strong level. It's been used for both resistance and support multiple times. This is going to be a strong one. So price is more than likely going to go past the 618, probably wick up here from that 618, probably close at the 618, and then come back. So with that in mind, you put your sell order in. Just like that. All right. Put your sell order in, you bring it down to 1, 2. All right. Now you can move your entry here. You can do that. All right, because there's a high likelihood that price is going to go up here. All right. Or you can get in early in case it doesn't go all the way up there to that 618. But I like the test of structure. So I'm going to move mine up there. Right. Now, also, look at this, the extension on the 272, the Fibonacci minus 272 extension there. You want to look to the left to see if you got clear weight. That happens to be right at a resistance level. So do I think I can make it there? All right. I'm looking at this rejection here and I'm going, am I getting too ambitious? And I'll look at it again. This is what I do. I do it all the time. All right. We got this one here. We got this one here. This is not going to be easy to get past. Here. We're already past it. We probed past it. But can we make this one stick? Well, I tell you what. I'm going to err on the side of caution. I'm going to go take that TP right there. Oh, actually, I'm sorry. We already got past that. I'm thinking that where I already extended it. I think we'll be safe because we're probed past this one already. All right, and we have momentum downward. All right, this is a correction. This is a corrective and bearish looking candlestick formation here. All right, and we're already in a downtrend. So I feel confident that we'll make it down to our 27 fib, minus 27 fib extension. All right, so we are already set. We are set. And let's see how it goes. All right, we got the pullback candle. That's what we wanted. That's a nice strong bounce there. So bears watching. And this is where you say, oh man, because now we're building structure. There's a structure here. That means if we are to turn back around, we got to come back through this. Let me use this. We got to come back through this structure from the entry. And it's going to be a speed bump. We're going to probably go boom, boom, and then come back down. You know, when you start to see candles going the other way, the different colored candles, all right? You start seeing bearish candles mixed with bullish candles. You got to know its structure, and these are speed bumps from the pathway from TP, from entry to TP. All right. Now, is it enough to turn price back around? You look over there to the left and you say, you expected some kind of static over there, you know, because this kind of price action is kind of messy. We're going to get through. This is representing resistance, and we're going to have to knock at it a couple of times to get by. That's the way I would look at it. That's the way I would look at it if I'm doing a live trade. And it turns around. Great. Look how we went right back to this level of resistance. This is a key level, like I showed you before. It was used as resistance here, now used as support. This is a key level here. So price is definitely going to be attracted to going back to that. And that's a lovely wick rejection. That's the kind of wick rejection we want to see. Boom. So we're hoping that we come on down to our TP1. That's an excellent follow-up candle. Look at that. We got a lovely rejection from that area. All right, so we are on our way at this high probability that we're going to make that TP. Even if it turns here, we got to go back. We got to hit this structure again, and that's going to present a good. That just gives us confidence that price will stay down, or just wanted to continue to go down. Excellent. We're about to hit TP. We're 99.9% there. And this is where you start to get nervous about hitting the minus 27, but we have the cover here. We created this structure. So we're hoping that we get a break and a retest, and then a continuation of the trend. And that's exactly what we get. We had the clue here with this wick rejection from this perfect retest, PRT, a perfect retest. And we're on our way down to that minus 27. And we have hit it, folks. This is the way it is done. Look at the angle, make note. Look at the angle of the 50 EMA. It was in stop loss range when we had our setup. Remember here, look at my my crosshairs, and look at the vertical line. When price made the turn here, you can see that the EMA was in place. It was in support of this level here. So if we put our entry here, it would be in support of the level, acting as dynamic resistance. We also have the 618 aligned with some kind of structure. And this is the resistance zone that it was aligned with. Not perfectly, of course. All right, because we knew it was perfect here. If the 618 was here, then we would have perfect alignment. But because the 618 was here, we know that an entry here would be protected. The stop loss would be protected by this level. You understand? All right, so we had our three confluences. All right, and you see that the 618 the price did not close past the 618 area. We had our three confluences. If we would have left the entry here, you know, I would have felt very confident. We would have seen a little bit of drawdown. But you know, not much at all. And it was quick. All right, so we got the gist of this doggone strategy. So let's go ahead and start our back test session, the live back test session. And we're going to go to, like I said, the second week of October. What is the second week of October? We got October in here, October 13th. October 13th, that's exactly where I want it. Okay. All right, let's see where we're at. Okay. What is this? This is November. I'm not sure. I understand. Okay. All right, I want to go to, you squeeze all this together so you don't get a hint as to bias and stuff. And this will extend us back a little bit. I want to go to October. Where did I want to go? October. Doggone it. I think it was October 13th. I think it was October 13th. Let me see, make sure. Yeah, October 13th, because that's a Monday. That's where I want to be. All right. October 13th, and that's the beginning of London right there. Yeah. I don't want London. I want to start work at Asia session, which is 1800. Okay. Let's see if we can get through these next 5 days in some kind of quick fashion. I don't want to make this too long, but it's the weekend, and that's what I made this for, so that you can go through it in your leisure. All right. Now, what I want to do, what I'd like to do is get those main turning points of price, where I think are key levels. That'll help me to avoid making bad, what do you call it? Price target zones. What I'm looking for is areas where I see price being used for both support and resistance. See how it hits this level and then comes back on top. It plays around here, there. Those are the areas I want to mark off. I see something over here. I'm not sure if this looks like a good enough area. This one here, I see here support. Maybe this one makes sense, maybe not. I don't know. I might be missing that area. Let's see how it looks when we blow it up. Maybe this area here. I put a few areas of support and resistance on there. I don't like to put too many lines because I don't like a messy chart. I like to work with a neat chart. All right, this is good enough for now. Okay, so let me see. Let me mark this area. Boom. That's not it. All right, and let's see. And we're going to go to. Oh shoot. Sorry. 1800 to 2 a.m. on. All right. Right there. All right. That's my session. That's my story. I'm sticking to it. All right. So we want to get ready to start here. All right. That's the 50 EMA. The first thing I want to do is make note of where we're at. Got a downtrend going. All right. Price has been up here for a little while, range there for a little bit. All right. Came up here. So this is the larger range. All right. I want to be careful when I come down to this area here. Okay. And we're heading towards that area right now. So I want to be careful. as careful as I can be. See how where price is? This is a good area. This is a good area I need to be careful at because it's being used for both support and resistance over here, being tested there, and we're doing it again over here, right? So I just want to be careful. All right. Also, okay. Also, I'm gonna notice. My shoulder is killing me. Also, I want to notice this nice, neat wedge forming here. What am I looking at? Oops, oops, oops. What am I looking at here? Just want to be careful and make note of price not getting past this area, not getting higher. You know, I'm looking for a breakout with that EMA. If I get a breakout to the top, that'd be great. If I get a breakout to the bottom, I'll be ready for it. Right? Let's go. All right. Oh, and we are respecting this level of support again. All right. That's something to note. That is noteworthy. Interesting. I'm going to bring this down just a little bit because I'd like to get as many touches on my trend lines as possible. Okay, because that's a breakout, break back into structure. You know, I'm just going to keep a note of that. But as long as we're near that EMA, I'm not looking for a setup. Remember, the EMA also acts as a bias detector. I want to be looking for shorts when I'm under here, and I want to look for longs when I'm above it. Okay. All right, we're breaking out to the top there. Not a big breakout because we didn't break past this level here. So that makes me want to make an adjustment. So we got 2 points of contact there. All right. Look at that. See how we're respecting this line of resistance that I had got marked down previously. That's interesting to note. I'm still respecting it. All right, we just got a break and a close below that little line. Got a retest of it. What do we have developing here? Now, we have broken below. Just making a mental note of the price action. We're broken below this low. All right, and we come back with a test. That's interesting. But did we break support? Did we? Nah. Don't be fooled, folks. Don't be fooled. But with a retest or with a break below here and a retest here, you start to think, are we going lower? But let's see. Let's watch the price action. All right, we broke right back into our structure, but we really, honestly, we never really left it. As long as we respected here, we respected these lows, we never really broke past it. Look at this, we're breaking up. We're going to touch that EMA, no doubt. All right. Now I'm starting to look. If I look for a setup, I need a breakout that goes higher so that I can use this area as the pullback area. Right now, I don't have a trade setup. All right, we're getting a turn here. Again, I don't have a trade setup. Some might want to put a buy order here. I'm not doing it. Not with that EMA up here. All right, that would act as dynamic resistance like it's doing here. I'm not messing around with that. And look at the way to the bottom here. So we're probably going up higher. Yeah. All right. And we were still respecting this line here, this support here. All right. Now, because it poked its head up above this 50 EMA and came back down, what I would look for if we're going back, we're going to continue down to the downside, which I think we will. I think we will. If we're going to continue down, I need it to break below this low. I need a break below that low so that I can get a nice retracement and have a good entry. Now we're testing. We tested this this wedge, but I'm looking more at this resistance line here. I mean, support line there. Well, it's acting as support now. We get below that. Now we're talking. We broke this low. Now I'm looking for a pullback candle. All right. It didn't have to wait long. So here's my setup. Here. Oops. I'm sorry. Here to here. All right. Do I have an alignment with the 618? There's we have an alignment with a level, but is this the strongest level? Is this the best setup in the world? Not to me. Especially when I got this this red line of this key level, what I'm calling a key level, that I marked from earlier back here. It might stop there. It could stop here first, you know, but I would need a retracement to 382 to even think about getting involved first. And if it doesn't get past that, we don't have a trade anyway. So really, I would love to see this get lower, where like right about here, where this 618 aligns with this level, this key level, and where we see all these touches of support and then a test as resistance here. I would like to see price continue down and then bounce from here. That's what I would like to see, but we don't always get what we want. So let's see what happens here. If I'm going to see how price acts when it gets to this 50, the 050 line. Oh, and that will work a little better. Is this enough? We are close to the entry area where I would feel most comfortable. Not most comfortable. I would feel most comfortable if the 618 was here. All right. Oh, that's what I would feel most comfortable. I see these wick rejections here. I see this low, these lows. This ain't a bad one, but we're not aligned. We're not aligned well with it. You know, it's close. It's close. These are the thoughts that go through my head when I'm watching price come on down here. So if it turns back here, where would I set my pending? Where would be best? Here or here? I would probably set my pending order. Here or here. I'm looking at that EMA. I don't want it to be too far away out. It's in support of the 618. So I will be more inclined to be as close to that 618 as possible. So let's see if this is the turning point. Well, what the doctor ordered. Look what the 618 is lined up with now. Perfect. For me, this is a perfect setup. That's if we get this thing to turn around from here. I would set my pending order on this 618 line. If it went even a little bit lower to, you know, this area, you know, as opposed to here, if we get the whole candle, if it catches the open close area, that'd be even better. Let's see. Wow. This is an extended breakout. Now, what am I looking at now? Clearly, there's no structure alignment. All right, the structure is here. We are close, but where would I put my entry? I probably put my entry here, with knowing that I might see drawdown to this point, which isn't much. It's acceptable to me, and I'm still have my EMA in support of that trade. And look at the angle of the EMA. We're going down. This is gonna happen, but it's the pullback that I'm waiting on. So this is the area. Let's get rid of this. All right, this is the area that I'm looking for. Right here. That's that kind of structure with the reaction here, with this bounce here, that bounce there. I'm thinking that's where price is going to hit. I could still put my EMA. I could still, if this is the turn, if this is the pullback, I think this would be the best one for me. So I'm going to get let me get one more candle first. See where we're at. Okay. That is interesting. If it covers this wick, we get that wick covered, then I'm waiting for a bearish candle. There we go. All right. So I'm thinking that it's going to come on up, and I'm going to put my sell order, excuse me, I was saying buy order all this time. I'm going to put my sell order, let's see. I'm going to set my sell order up the way I would normally do it. All right, I get a 1 to 2 risk reward, right? I'm pretty sure, because this little area here is 1.6 pips, 1.5 pips. All right, I could put my sell order here, but I'm pretty sure I'm going to get wicked up to this area to test this area. So I could, if I wanted to get at the top of the move, you know, I can get in here, but I think getting in early isn't going to hurt me for 1.5 pips. And I like the support of this of the EMA being in my area, and I like to get in at 618 because it usually comes. This is a magical number. It's like a magnet. So getting in early isn't going to hurt. Let me look to the left. All right. Let me see where are we at. All right, the 618 is right. Look at the minus 27. The minus 27 fib is right up under this the support area. Can I get here without a problem? Looks like it. Why does this keep doing that? All right, looks like it. If I go here, how am I looking? We had a reaction here. We had reactions on the other side. We are close. We are close, folks. So I'll tell you what I'm going to do. Right there. That's where I'll go. I'll go right there. And that's pretty close to that minus 27. I think we'll be fine. Okay. Let's see how we do. Now, when do I become less interested in this trade? Like I mentioned before, once it goes past the 786, this is the last fib that will measure for retracements. We get closes past that, and we come to that stop loss. I mean, you know, I'm looking to. I'll probably be looking to take, once we get a close past 786, a close past 786. When it's up here, I'm going to start looking to, you know, it's going to be, you know, you start to think of at the halfway mark. See this line here? See this red line here? This is that support and resistance key area. So once I get past there, If we start get close past there, I'll start thinking of taking half of my position off, go to the 50%, so that when it does hit, I kind of mitigate the losses a little bit before it hits full stop loss, which will be at 1%. You understand? Once I get past the halfway mark of my stop loss area, I take some off. All right. But in this case, we have a support and resistance key level here. So I might let it go all the way to stop loss. This is how I think. This is how I conduct these, how I manage my trade. And if you have a better suggestion, I'm more than open to it, but that's the way I do it. Okay, let's go ahead. Let's see what we got. Hopefully it doesn't break the low of this candle here. And let me get a pointer, by the way. So where's that pointer at? Is it here? Yeah, okay. So I want to watch out here. I don't want it to go past here. That means I would have to adjust this thing again, and I don't want to. Okay, let's see what we get. All that talking and getting into it, man. I'm hoping that you learn something from it. All right, got a little structure building here. That one little candle, that one odd candle that's in here makes all of the difference, man. You have no idea. It can turn price around. You just got to factor those things in. We're heading up. All right, we done got past the 382. I'm hoping that we get past the 50 as easily as we just did the 382. And we did. Look, let's take a good look at this. That's the way I like it. All right. Price came up to the 50, touched it. Now we don't have it in support of the 618 anymore. All right. But it's still holding. We haven't had a price close above this. That's a good sign. So there's a candle of indecision. Hopefully we stay below the resistance area here. And we also got to keep in mind, we have this one as our backup. All right. We have this one as our backup here, this key level. So you should go into this trade with confidence. I'm just hoping that we get a nice strong drop from here. And that's what I'm asking for. Boom. All right. Now look at these different colored candles here. That bearish candle, that bearish candle. When we come down, come back up, come back up. That is structure being built. We got structure being built. So these things are going to act as speed bumps on the way down. We'll come up, boom, boom, boom. What do you think we're going to do when we get down? Boom, 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 boom. All right. We just hope that none of these are enough to turn price to go back up. That's what we hope. All right. Let's see what we go further. I see now this one, doggone it, done turned it. Look, doggone it, done turned it. I don't like seeing it turn back up. Hopefully the EMA will hold it at bay. All right, we got to close above the EMA. That's not what we would like to see. All right, price is battling. That EMA is doing its job, acting as dynamic support, resistance, excuse me. All right. That's what we want to see. We got to close above. Okay, we done broke our resistance. Now, if I didn't have this line here, this support and resistance line, I would start thinking of halving, taking 50% off my trade in the stop loss area. We have this here. I'm looking at this mass here. Hopefully that'll act as strong resistance right along that line. See how many tests we have here of this support area? I mean, this as support. Hopefully it'll act as resistance up here. I don't want that thing going all the way up there. And we are testing that area. Doggone it. We are testing that area. That's not optimal. And we are more than a little bit halfway into the stop loss area. Hopefully that line holds. And it's holding so far. All right, we're coming back testing this, what was resistance. We're now testing at support, and we have a wick rejection there. That's not the sign I want to see. We're probably going to go back up for another test. Oh, a close below, but we're hitting resistance. We're hitting the EMA as support because we're above it now. Hopefully we can get past. It's holding as support. Come on, baby. Really, what is acting as support is this. The EMA only illustrates, only gives us a visual of what price is actually doing. Just remember that, folks. So really, it's reacting off of this structure here. We built that structure. Now we're reacting off that structure. I'm hoping that we can penetrate this doggone structure. I hope this structure is stronger than this structure here. And we're on our way down. And we're back up. God dang it. We got past. Now, let's read what we got here. We got past the initial support area, and we come down to this area here. We're testing that area. We're testing this support area, which was acted as resistance. We got under it. Now we're acting as we tested as support. We got under it. Now we're testing as a resistance. There's no wick above this bullish candle. So in all likelihood, we're probably going to test this support and resistance key level here again. Yeah, we're getting above it. Now that's the kind of resistance line that we need. That's what we need. We need, I mean, that rejection, that wick rejection is what we need. Hopefully this test of this support area here, which was resistance on the way up, hopefully we can get right back down, forming an M pattern. We haven't closed below it yet, so I can't get too happy. That rejection is to the upside on this bearish candle. So, yep, that's what I thought. I need the test of this line to hold. I need this test to hold as resistance. And it looks like it's doing it. Yes! We have an M pattern. Now, the only thing with M patterns, it's not a word of caution, but what I like about M patterns is when you have an M pattern, what you want to see, what usually happens is it creates the M, and what we look for is a test of the neckline and a continuation of the trend. All right, that's the one M pattern. The other M pattern is the extended M pattern, where that last leg is very long. We want to see a test. We want to see it turn a retracement of at least 38 degrees or the 38 fib level, and then a continuation of the trend. So I'm glad to see this M pattern. I'm hoping that if it does come back, I'm hoping that if it does, man, I'm hoping that if it does come back up, it tests this area and then continue down to our TP. But this is a great sign. We're back in profit, baby. We're in business. Hopefully it doesn't go back up, because we done broke the lows over here. We broke that low. If it comes back, I hope it doesn't go any further than the neckline of that M. Woo! We done almost reached TP, but again, remember I was telling you about those different colored candles. We got structure here. So it is testing where these wick rejections are. All right, that is testing that area. Hopefully it doesn't go all the way up. Hopefully it goes like 38 degrees and then come back down. 38 fib level retracement and then continue down. I need this wick to be filled. Excellent, excellent, excellent. Are we going to get a retracement? That might come now. Oh, we have hit TP1. Now, are we in business or not? Now, look, like I said, I like to target these extension levels. My voice got a little higher because I'm a little excited. My voice got a little higher. I like to test these extension levels, but just know that you done banked at TP1. You done banked your profits here. Okay. Now, from here to here is a 1-to-2 risk reward ratio. But right now we're working on 76, a 1 to 2.76% ratio. We're adding like 3/4 on. Okay, we're adding 3/4 to this, 3/4% onto this this risk reward. Then that would be great if we can reach that. But we already did 1 to 2 here. You can get out of your trade and bank this and move on to the next trade. You can move your stop loss to this and follow it to this area. Just don't let it. I wait until it passes this area to start trailing with a stop loss. I don't want to give any of this back, right? If you're going to do it that way, but I'm targeting this this area, and if it starts to turn around, it'll hit this resistance area first, which was acting as support here. I'm thinking that it'll act as a resistance here and protect our profits and continue on its way down with the trend. And we're testing, we're threatening to pull back, but because you see the structure over here built, we got to hold. It's testing. We're holding. Hopefully it drops from here. Oh, come on, man. All right. So what do we have to protect us here? This one odd color candle in this whole impulse down. So we have this here as well. So hopefully this area turns price back around. And look, we got some respect showing up a little bit more. We're still testing. That's what I needed. That's what I needed. This is what I needed right here. Turning right at the same zone of resistance, and we're going back up. Doggone it. We did test. We did go back up. We didn't close above that area, which is good. And we have a nice rejection there. That's what I need. That's what I needed to see. Again, we're at the TP, but this time that's a very small wick of rejection that kind of gives me some good vibes going down. Gives me a good indication that the price will continue to the downside. Excellent. We done broke these lows. That there's a high probability chance that we will hit our TP, and this is driving me crazy. All right, please go on down. Look at all this respect here. That's why I'm still encouraged. We got a little rejection here, but we have closed below this area. So, and we're still respecting this this resistance area here. I'm inclined to say that we're probably going to hit that TP. We just have to be patient with it. We're still heading downward. All right. We're still doing lower lows and lower highs. That's what I needed. And let me tell you something, folks. When price comes this close to my TP, the first sign, the very first sign of what do you call it? Rejection, the very first sign of a pullback, of a real pullback. This is the rejection. I get nervous here, but I start seeing a bullish candle. I'll cut the trade and take my profits there. And we didn't need it there. We read everything right. We done hit our TP, our ultimate TP. I'm going to finish out this backtest session myself because that was way too long. this video is going way too long, but I'm hoping that you get something out of what I just showed you. I hope you see the strength of the 3 Confluence trades. All right, when the EMA is above and close to your entry and angled in the direction of your trade. All right, I hope you see the power of aligning structure with the fib levels, 618, 382. These fib levels in alignment with structure are two confluences that joined that 50 EMA when it's close to your entry in your stop loss area. All right. And I'm glad this trade worked out because it was it was a live back test. And I gave you other stuff too, the power of the M patterns. All right. And you'll see the exact opposite with the W patterns and the extended M and W patterns. And to show you what I meant by how that extended M pattern works, I told you it would, we look for it to hit a retracement of 382. Did it not hit it exactly as it when it retraced? It hit that 382. That's the way these extended M patterns work. Exactly here. Boom, back. All right. With the regular M patterns, you look for it to come down and test this. Let me use the marker here. You look for it to make the M and then come back and test the neckline and then continue down in the direction of the trade or the trend. All right. You know, get at me with comments or whatever, man. And I welcome them all. And I'm hoping that this works for you. And you can easily jump into a good trade with it because some guys are searching for easy strategies that work. These are high probability trades. Let me tell you, 3Con is a high probability trade. You're going to get some break evens. All right. If you break even at the halfway mark of each of your trades, I don't do that anymore. All right. The only time I'll break even is when we had one pullback after it goes from past the entry point. I needed to pull back once and then continue and break that low it created, break the low, and then that's when I'll go to break even. Up until then, I get knocked out of a bunch of good trades because it comes back and hits me at break even at 1-to-1. 1-to-1 is a good trade management technique, but I've learned to, my experience has taken me to the point where I need more protection on that 1-to-1 because I get knocked out of break even and then it goes ahead and hits my TP too many times, and it's very frustrating, especially with great trades. All right, that's all for me, folks. And get at me with comments, and I'll see you soon in the chat.